Hi, it's Jim Freeman again. You know, I love stories. Stories about real people are so interesting to me because you could not write a fictional story that is as interesting as life. This story involves my hardworking friend, Sean Murphy. Sean is a successful professional that was frustrated because we had been searching for 2 years to find a home that he could both afford and that he wanted to live in. After a long search, we were able to find a home that he loved and was able to acquire by assuming a loan with an interest rate of 3.4%. That's a time when other loans were being originated at 7% and above, saving him hundreds of thousands of dollars over the remaining life of that loan. It's a great story. Please watch to the end and let me know what you think. If you would like to create your own story of success, use one or more of the contact pathways below. Set an appointment on my calendar, email me, register on one of my websites, or call me to have a straightforward conversation. Talk to you soon. Hi, Jim Freeman here from the JP Freeman team at Coldwell Banker. I'm here today talking with two special friends, Sean Murphy, to my left, Cherie Nurmi, further left. Cherie is with American Pacific Mortgage. Sean is the happy owner of this home that we're sitting in. Nicely decorated, snow outside, Christmas tree in the window, looking out on the water and the bridges in a nice, I think what you call it, a rural urban environment. And we're here today because Sean has recently purchased this home using a very special technique, which I want you to hear and learn about this story because it could be important to you if you happen to be a family or a person looking for a home to purchase. Now, we're in a crazy market right now. Home prices have been rising steadily for a long time, many years. But more recently, in the past year and a half, or year maybe, interest rates have been rising at the same time. And it's kind of an odd condition. Usually when that happens, home prices will fall. But for a lot of reasons, which I won't go into detail here, inventory is very low. Mm-hmm. And so this combination of high rates and low inventory kept home prices at an elevated level, which is really tough on first-time home buyers. Mm-hmm. And any buyer. So Sean is in this home. We're going to talk a little bit about it, but I want you to hear his story a little bit because of his background, which is an important part of the story. So why don't you just tell us who you are, Sean?
Sure.
How you got here?
Well, I'm Sean Murphy. I grew up in Seattle, and I decided long ago that I wanted to come move out to the Kitsap Peninsula, where it's more my speed. I still work in Seattle. I'm a lawyer down there, but I like the ferry commute and all that. So I set my sights out here, and I met Jim several years ago at a house he was listing actually, and I was attempting to self-represent myself as a real estate buyer. And we struck up a great relationship and made some offers on houses over the years, but 2 years later, the home prices and interest rates continued to climb, and it seemed like an insurmountable burden to become a homeowner. Until, of course, we found a house that had an assumable loan, and we investigated that more, and here we are.
Okay, sitting in this happy home. Yeah. So, Cherie, why don't you tell us a little bit about your background, who you are, what you do, and we'll get into details later about how you helped. But
yeah, so with American Pacific Mortgage, been lending for over 25 years. Prior worked for one of the banks, Wells Fargo Home Mortgage, for 22 years, and been out with American Pacific Mortgage almost a couple of years now, and just helping clients, my passion. To see Sean sitting in his home today is like really a sense of accomplishment, knowing that when you think that you can't do something and then you can, and it comes to fruition, it's pretty exciting.
Mm-hmm. Okay, so, and by the way, when Cherie in her tenure and during her career has originated and closed tens of thousands of loans, to help people buy homes. which is one reason she's in here sitting in this story. That will come up later. But Sean had been looking for a home for a couple of years and found a few. I think we made some offers on that. An important part of the story is that during that 2-year search period, he was approved by lenders for an amount greater than it cost him to buy this home today.
That's super important to note because he had done all the right things to make sure that he was ready for home ownership, gotten approved, had his credit in order, income was great.
Save some money.
Savings, so all the pieces were there, a dream client to make home ownership happen, and just getting credit approved before he started his journey was super important.
Right.
Totally.
Now, this particular set of circumstances won't be true all the time, but in this 2-year period during the search process, 2 things happened. Home prices went up, interest rates went up further and sharper. And this has put a lot of pressure on Sean, but also on any buyer, who's trying to find a home in this market. But what was unusual about the home that he purchased is that the seller had an assumable loan. And in this particular case, the seller happened to be a veteran, had a VA eligibility certificate, and had purchased his home using a VA mortgage in a time when interest rates were below 5%. What was the interest rate that we eventually assumed?
It's around 3.2.
3.2%, okay. And at the time you closed on that loan, interest rates were ranging between maybe 7 and 8%. They got up to 8%, they backed off a little now. But in your recollection, Sean, you calculated actually, you did a lot of homework to try to decide if this was worth doing.
Right.
And what's the difference in value and in payment for you?
The difference in payment between 7.5% loan and what I'm currently paying is $2,000 or $3,000 or more a month, and then over the duration of the lifespan of the loan, it's savings of almost $1 million.
Right.
So it's a great boon.
It's a big deal. And what it means for you, if you're watching this video and you're looking to buy a home in this market, is that you can take advantage of those record low interest rates that occurred for all the mortgages that were originated between about 2009 up through 2022, roughly.
Yeah, early 22.
Yeah. So in that period of time, maybe all those originations were averaging below 5% annual rates. So another piece of this picture is that there's a lot of opportunity out there. And I think you told me from your research, Cherie, how many loans that are active today are below 5%?
Between 4,000 and 5,000 homes that have assumable type loans on them.
Have a VA loan. Yeah. But how many active loans are below 5% generally?
A lot.
Yeah, I think
Millions.
you told me 65% at one time. So one of the reasons that there's low inventory is because all the people who purchased or refinanced their homes during that period from 2009 to, let's say, 2022, were able to get these record low loans. And so if they sell their home today and then borrow more new money and buy another house, they have to go from a sub 5% loan to maybe a 7+% loan, which is a big deal. It's almost double or sometimes more.
Impacts your payment.
And exactly. So you looked for 2 years, Sean. You had a particular style of home. I think you wanted a waterfront home. We looked at a lot of places in 2 years. Your partner found this home in assumable loans in the marketing remarks.
What's that?
And what's that? The seller had actually more than one offer on the home at the time that we were looking at it. And by the time you wrote your offer, there was at least one other offer in place that the seller had. So it was competitive. The seller was smart enough to know that there was a value to his loan. That was part of the value of the home, actually. We had to be competitive, but we made an offer and it was accepted. What happened next?
Well, then we had to go through the process of getting the loan assumption approved, which was a pretty long and hard-fought battle. It required initially getting turned down by the servicing lender, who's a private company, not the VA, who has an obvious financial incentive to lend out money at the current rates rather than continue a loan at a low rate. And then we needed to essentially seek reconsideration of that original decision, and
What decision was that?
the decision was to not approve the assumption of the loan.
Right.
So with Sheree and Jim's help, we prosecuted that and got to where we are now.
Well, and what's important to know about that is, normally when you're buying a home, you have a lender, you may have a broker that you're working with, and those people are assisting you to get through the very complicated process of buying a home.
Advocating for you.
Advocating. And even in a normal case, when you're just originating a new loan and going through all that process, there's a lot to do.
Mm-hmm.
But in the case of an assumption, a lot of the lenders don't want the lender, a lender's representative and a broker involved in that discussion. They want the buyer to do that.
Mm-hmm.
And
Well, and that's important to note, because when somebody is assuming the loan, they're not working with a direct lender.
right,
They're actually working with that servicing lender
Mhm.
when you put in the application. So
Right.
you're calling that buyer's, or the seller, as a buyer, you're calling the seller's loan servicer and saying, I would
Hey,
I'd like that loan.
Yeah.
At 3.2, I'd
Mhm.
like that loan.
Mm-hmm.
right. And I thought it was funny because during the conversation, that's how we started out. Sean had to make contact with the seller's lender. They had an assumption department, they had people assigned that. And if I recall correctly, one of the people you talked to said, gee, that's a pretty good loan here. And it
I bet
was.
you would like that loan.
Yeah, I would like that loan. And by the way, the VA says that it is assumable. So it's not,
It's a benefit.
it's a benefit. It's a benefit to the seller.
Mhm.
So Sean was turned down. Now, a lot of people at that point would have given up. Because they don't know the difference between a servicing lender, an originating lender, and a note holder, and a note servicer, and a bond trustee for a pool of mortgage-backed securities. And fortunately, Sheree and I do. At the point where it was looking bad, I said we need some bigger guns here. We need some help. We need somebody that understands the language of the loan process and the whole sort of background operation of how loans are serviced and sold and what have you. So we called Sheree, and what happened next?
So at that point, in talking with Sean on a Friday, he had just found out that the servicer was not going to do it for him, and I said, do you know why? And he said, well, they said I have limited credit. I said, that's interesting, so
Now
what do you have?
remember, Sean had been pre-approved for a higher amount.
For a couple years.
For a couple of years.
Had, made sure that when he was putting an offer, the responsible thing, he had the credit, he had the income, and he had the savings to be able to put an offer on a property, knowing that he'd be able to complete that transaction. So all the right things. So
I think the term of art was it was a no-brainer.
yeah, exactly.
Yeah.
And so after having that conversation with Sean and finding out, well, this is why they're saying I don't qualify, and I said, well, knowing what a VA loan requires, and knowing you met the income piece, knowing you had the savings to be able to say, okay, here's what I'm assuming, and here's the purchase price, I have that savings and I can meet that appraisal gap. Then what was the credit piece of it? And there was a great credit score, and yes, he had credit, but they wanted to know that he had more credit, or said he had insufficient credit, but yet there was several things, knowing the VA loan, that he actually was, what are you making payments on? And there was 4 or 5 things that you've been making payments on for a couple of years. And those are the non-traditional things that maybe are credit, paying really well, but don't show up on a credit report. By Monday morning, he had all those pulled together to provide the servicing lender to say, what about these things? Will you reconsider?
Right.
Yeah, so the point here also is, Sean is a skilled attorney. VA law is not his you know.
Not my bailiwick.
Not your area of expertise. Because of his skills and experience, he was able to put the documentation together in a very complete and understandable way, one that met the criteria
From a lending perspective.
from a lending perspective. And that happened because of your experience, you were able to tell him what to do. This is a huge opportunity. If you're a buyer and you're looking in this market, this is a big opportunity, but it pays to get the right help.
Totally.
Yeah, absolutely. So we went through that, it was frustrating, we had a lot of conversations, the seller was frustrated, you were frustrated, everybody was frustrated, the lender was frustrated.
Yeah.
But we.
Servicing.
Yeah, we got through it and succeeded, and today Sean is enjoying a home that he likes. This happened to be one that he really wanted to purchase and live in. And he got an economic benefit that if he remains in his home for 27 years and stays here, is worth, as you said, nearly $1 million.
Yeah.
Yeah, total payments. In this particular circumstance, the seller happened to be a veteran, and he had a VA eligibility certificate. But he was willing to sell his home and allow even a non-veteran, which is possible. Sean is not a veteran. He was able to purchase this home and take advantage of the low rate environment which it was originated. But VA loans aren't the only ones that are suitable.
Right.
So,
That's
Sharif,
correct.
what else? What other types of loans are assumable?
So other government loans, FHA assumable, USDA assumable, and of course the VA loans. There is a very, very small percentage of conventional loans that if they have an assumption rider might be assumable as well. So it's opportunities are out there for the economic benefit qualifying wise. If you don't have enough for the purchase price to what the assumed balance is, there's also opportunities to come in and do like a second mortgage.
So what you mean, if they don't have sufficient down payment to cover the gap between the purchase price and the assumed balance,
Correct.
there are ways to get money for that?
There is, definitely. So all of those things are things that we would explore in the pre-approval process before you even start looking for a home, to know that, here's your affordability piece, and then once you find a home, and if it happens to be an assumable mortgage, how do we put together the pieces of the puzzle for an offer?
Right. And what's important about that is, and this is true if you're just looking to buy a home normally, originate a loan, use that purchase money loan to plus your down payment to purchase a home. People, it's more complicated than you think. And you might think, hey, I just make an offer, I negotiate the price, and then it closes. No, that's not the way it works. In every transaction, there are complications, there are things to know, there are nuances. These purchase agreements are 20, 30 pages. A loan agreement and a note and a deed of trust are 50 pages. And so it helps to have people who have experience to give you context and help you structure your offer and structure your loan arrangement so that it maximizes your advantage. And all that little stuff that is in those 80 pages worth of documents add up. And if you don't know, you can reach a point where there's a hitch in the giddy up, and it might blow the deal apart, or it might cost you more money than you think it's going to cost. And nobody likes surprises. So how did we do, Sean? How did we do in that process?
I think we did excellent.
Yeah.
We got a great deal going forward with the payments, and a house that I really liked. So
Okay.
on the whole, love it.
So would you recommend to anybody watching or anybody interested in purchasing a home, would you recommend this process to them?
Absolutely. Certainly worth asking about and exploring, because there are hidden opportunities out there.
Well, thanks, folks. Thanks, Sean. Thank you, Cherie. I'm going to put some contact information for Cherie and for me in the notes below this video. And if you want to contact us, all it takes is a conversation. It's not going to cost you any money. We're not going to obligate you anything. But you'll get some great information, and you'll be able to strategically structure your search and your offer process so that you can work out in what is a very tough market today for buyers. All right, thanks, folks.